Good morning. Intro, 15 seconds. Welcome to your daily market breakdown. It is a day of massive contradictions on Wall Street, where red-hot inflation meets a cooling economy. Yet artificial intelligence just keeps carrying the market higher. Let us dive into the numbers driving your portfolio today. Segment 1. Macroeconomy. The macroeconomic picture got very complicated over the past 24 hours. The Commerce Department reported that U.S. gross domestic product growth slowed sharply in the fourth quarter to an annualized rate of just 1.4%, which is less than half of the 4.4% growth we saw in the previous quarter. At the exact same time, the Federal Reserve's preferred inflation gauge, the Core Personal Consumption Expenditures Index, came in hotter than expected at 3.0% year over year. This means inflation pressures are intensifying even as economic growth loses momentum. Meanwhile, initial jobless claims ticked up to 212,000, and recent Fed commentary suggests policymakers are perfectly willing to keep interest rates higher for longer if these prices refuse to cool down. Segment 2. Market Overview. Despite those scary inflation numbers, tech earnings absolutely saved the day and pushed markets higher. The S&P 500 climbed 0.8% to close at 6,946, while the tech-heavy Nasdaq Composite surged 1.26% to finish at 23,152. The Dow Jones Industrial Average also finished in the green, adding 0.6% to close at 49,482. We are seeing a massive sector rotation right now, with information technology acting as the hottest sector on the board, while industrials lag behind. Overall market sentiment remains aggressively bullish for tech, though the broader market is acting a bit more cautious. In the bond market, that hot inflation data pushed the 10-year Treasury yield up slightly to 4.07%, while the US dollar remained relatively flat against major currencies. Segment 3. Stock Spotlight. We have major movers in the tech and crypto spaces today, starting with Bitcoin. The world's largest cryptocurrency is trending up, trading around $68,500 after a 4% jump in the past 24 hours. This is a highly positive signal, especially since it defies a broader extreme fear sentiment in the overall crypto market right now. Nvidia is trending sharply up after crushing its fourth quarter earnings report yesterday, posting a record $68.1 billion in revenue. The company confirmed the AI frenzy is far from over, sending a massively positive signal to the entire semiconductor space. Qualcomm is also trending up, jumping over 2% following a major upgrade from Wells Fargo, which bumped its price target to $150 based on up to $7 billion in underappreciated revenue potential from data center chips, signaling strong institutional confidence. On the downside, Tesla is trending down, slipping around 2.5% amid a broader wave of insider selling across the Magnificent Seven, serving as a slightly negative near-term signal as investors take profits. Alphabet is also trending down, dropping about 3% on those exact same insider selling fears, which is acting as a warning sign for mega-cap tech. Amazon dipped 1.4% in sympathy with the broader group, presenting a slightly negative signal today despite their massive ongoing AI investments. Finally, Microsoft managed to buck the trend, edging up 0.2% and shaking off the mega-cap fears, supported by its resilient cloud infrastructure demand, giving us a neutral to positive signal. Segment 4. Risks and Opportunities. Looking ahead to the next 24 to 48 hours, investors need to keep a very close eye on the bond market's reaction to this sticky inflation data. With the PCE index coming in hot, any upcoming speeches from Federal Reserve officials could turn incredibly hawkish, which threatens to pull the rug out from under this tech rally. We also have key consumer sentiment readings and manufacturing data dropping tomorrow, which will reveal exactly how everyday Americans and businesses are handling these elevated prices. That is all for today's market wrap. Remember to hit that like button, subscribe for your daily financial updates, and please remember that this is for educational purposes only and not financial advice. I will see you tomorrow.